Our goal is to generate income, right? We're going to continue to generate income by selling covered calls.
I think about it as a technology company that's providing services to either their own company and to others. They can't possibly be matched by anyone else.
All right. How's it going, everybody? It is Dennis, and we're back with another video. And today we're going to be talking about another, once again, TSLY. I know I've been making a lot of videos about TSLY, and there's a lot of videos going on YouTube for YieldMax ETFs about TSLY. It's been a lot of news about it because of what happened with TSLY. If we look over to Robinhood, it has dropped a good amount for the past week. Right, she started the 3 months. It's been dropping, and we've reached $11.35. Not the lowest it's been. $10.93 is the lowest it's been. But we've been dropping significant amounts, and I myself am down 16.63%, as you can see down below. A total of $1,300 roughly. Why am I making another video about it? Well, I myself watch YouTube videos as well about YieldMax ETFs. I watch YouTube videos about Tesla, the underlying stock of TSLY, and I also watch the YieldMax ETFs. I watch their TikToks that they've created a new TikTok page. I watch their interviews that they go on to, and I keep track with that information. Now, why am I making this video? Well, I'm trying to explain why TSLY is not done. Right? A lot of people are hating on TSLY now that they've lost their initial investments onto it. And yes, it is down, but when you put dividends into it, when you incorporate dividends that you've received on TSLY, you're not down that bad. Okay? You're not down that bad. If we go ahead and look at TSLY, we've done this many times. It started off at $20.06. We're down to $11.35. So you're down roughly $9 on your investment per share. That's a significant amount. We're down roughly 43% from opening to close, right? From the starting of the ETF to now. But it is not done. Tesla's not gone. The underlying stock is not gone. Yes, YieldMax ETF. Yes, the team did do a wrong decision. They were a little bit bearish on Tesla. They were bearish. They had a contract position at roughly the $217 mark. That was a little bit bearish, right? It was a little bit bearish. They thought that Tesla wouldn't go back up. They thought it would stay roughly at the 190 to 200 level. It happens. Did they get a good premium for it? They did. They also made some positives from it, right? They did sell a call that they bought with some positive from it. They made a good premium from it. So it wasn't all that bad. Now, what people are missing really is people see this as a growth stock. It is not a growth stock. It is not a growth ETF. I don't understand how much people have to keep talking about it, saying, oh, I'm losing my investments. I'm losing my value. Yes, but you're also receiving a whopping 61% distribution rate. 61.97%. Name me another ETF that's paying you that much. What? QQQY, JEP, JEPI, JEPY? All these stocks that everybody's talking about, QLDY, whatever, all these ETFs people talk about, are they paying you this much? They're not. They're not paying you this much. They truthfully are not. They're also losing value. They're not paying this much, okay? They're not. They just aren't. You could invest into other ETFs like AMZ, APTLY, MSFO, ARK, all these other ETFs, and yes, sure, maybe they're a little bit safer because on the long scale, the growth is pretty good. But if you want something that pays well like TSLY, you will go with TSLY because TSLY has the volatility of Tesla, the underlying stock. If we go to Tesla and we go to volatility, right? If we go to the volatility for this past 52-week average is 56.5%, right? We can say that the 56.5% is what's your return going to be for this month, right? For this month, our average is 56.5 with the current being 43.3. We can easily say that our return for this month that's coming up in December is going to be roughly 56.5% for the year. Was going to go for the year to date. It actually might. That's the return that we might have, right, on December, based off what history shows and what history shows with other stocks that I trade myself, like Rye, that 52-week average is what determines what your returns are going to be. So a 56.5% return at the moment, we're not in December yet, it's pretty good. It is pretty good. Now, I've talked about this before. I've talked about volatility, and I've talked about TSLY and how it's not done because Tesla is a great underlying stock. But I'm not done, because this time I came with actual information, actual content to show you guys. So we're going to start off with an interview with the fund manager of YieldMax ETFs, Jay Persically. Sorry if I'm saying his name wrong, but I'll just say Jay. And this is an interview that he had. And this is the question that the interviewer, shout out to Life Enriching Financial Coaching, whatever, their YouTube channel, you could check them out. They did an interview with him, and this is what they talked about. They asked the same exact question that most of you ask. Let's listen in.
So next question related to that, would you consider, if the fund dropped below $10, would you consider cutting the dividend payout to help the principal stay where it is? Or what would the options be if it kept dropping?
Yeah, this is the same question. Sorry for breaking it. This is the same question everybody asked. Can we get rid of some of the dividends to make the growth? Now let's see what he answers.
Yeah, so two things here. We've talked a little bit about this in the past. So the first thing is our goal is to generate income, right? We're going to continue to generate income by selling covered calls, right? So what you're asking us is, hey, would you take the yield from a 50, if that's, let's just use that as a broad average, would you take the yield from a 50 down to a 30 in order to, either reinvest more of the dividends into the portfolio, or when I say reinvest the dividends, reinvest the premium into the portfolio, or to give yourself more room on the upside, right? And for us, the strategy has always been the goal of the fund. The name is YieldMax, right? We want to deliver maximum yield. That's the price.
Exactly. Maximum yield. Just like said by the fund manager, maximum yield. We're not here to give you growth. We're here to give you maximum yield. And there's more to it. Listen in.
Primary goal of this ETF. And I say that with enthusiasm because I think total return of a yield-based product can get confused with growth, like total growth. And growth is not the primary goal of this fund. The primary goal of the fund is yield. So that's maybe the first answer is probably not, right? $10 is $10 is an irrelevant. No, I know you picked a random number, but $10 is kind of irrelevant. At $10, we should be kicking out, whatever that number is, 41 cents in a month, which annualizes to 50%, right? So did that quick math in my head, by the way. I'm sure it's close. So that's the first thing. The second thing is, look, you said to maintain the value, right? This is one of those really key things that I've always harped on when we've talked in the past is it's the value in the portfolio that matters, right? If you start out with $10,000 in TSLA, the value of $10,000 is really what matters because when we continue to pay our yield, you're earning that 50% rate on the $10,000 balance. So what does that mean? It means reinvesting the dividends because what's important is not the value of the ETF. What's important is the value in your portfolio, right? So this sounds really simple, but the value in your portfolio is shares times NAV, meaning ETF price, equals the dollars that it's worth in your portfolio. That's what's important. That's what you're earning your yield on, right? You don't earn the yield on just the price of the ETF. You earn it times the number of shares that you have. So this is why I've always talked about how important it is to reinvest the dividends into the ETF. So we're almost at...
Okay. So yeah, as you can see from the fund manager, he himself says that you should reinvest your dividends. And of course, people say, oh, he wants you to reinvest because he wants to make more money off your shares that you put in. He wants to get more out of that 1% that he's getting, the fee that they charge you on a yearly basis. Yes, I understand he's the fund manager and he does want to make money on his side. But reinvesting back into TSLY does bring you better returns. If we look at dividend, retire on dividends, shout out to him. I watch him as well on his daily post that he does, seeing what trades TSLY does. On his latest video, which will be down in the links below, he did a comparison on how much your return will be on Tesla compared to TSLY if you were holding it for the same amount of time. For Tesla, your return would have been roughly 32%, right? Okay, it's a good amount. Now, if you look at TSLY, you would be down like negative 1%. Understandable. Okay, so what? If you held Tesla, it would have been better. If you held TSLY, it wouldn't. But if you're reinvesting the dividends, if you're reinvesting that and you're growing your share price, you would have a good amount of shares. Those good amount of shares would then be gaining you a good amount of profits, right? If we look at the last one that paid out, the last dividend that was paid out was 0.58 cents per share. If we get the next payment at a similar price, we're buying more shares for cheaper, meaning there's more shares for you to earn for the next time around. So you're growing at a crazy rate, right? You're still growing your portfolio at 50%, 60% a year, as well as there's that chance that it goes up as well from growth. Of course, the ETF is not meant for growth, but there is some growth aspect. If we look at the 1 year compared to Tesla's 1 year, we can see the dips, right? We can see right here on the dip in December 27th, there's the dip right here in TSLY. If we look at this up part, February 27th, where it was high up for TSLY, we can see it over here at Tesla. On February 27th, it was right there. It copies Tesla. Of course, it's not as much volatility as Tesla, right? The underlying stock, it's a little bit, a little bit more minuscule. It's a little bit more steady. And here we can see the big drop while there's a steady pace over here, which once again, it was a mistake made by YieldMax sides. They did kind of go for a bearish outlook on Tesla while they should have stayed bullish, but it's fine. It happens. Now, with all these shares that you'll be reinvesting, what would you do with them? The ETF's not growing, right? So what's the point of getting this? Well, you're getting more yield, but there is also growth incoming. And this is where we go over to the other pieces of video. So this is another interview from CNBC with Ron Barron, which is a huge bullish outlook, who has a huge bullish outlook on Tesla. And this is what he's saying.
Talk about Tesla as we always do, but then I want to sort of broaden it out and talk about the markets and some of the other companies that you're invested in. There was an analyst call just yesterday, this is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this and probably laughed given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to either their own company and to others. They can't possibly be matched by anyone else. They have data, technology. They make cars cheaper than anyone else. When Ford makes one of these cars, an electric car, every car they make, they lose $36,000 on. $36,000 per car. Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant,
But yeah, cutting it short, that's pretty much the best part of the interview for my part. But see, of course he is bullish on Tesla. He's always been bullish on Tesla. Ron Barron is known to be bullish on Tesla. But why does this matter for TSLY? Well, Tesla's an underlying stock. If Tesla is bullish, if Tesla is going up, so will TSLY. Yes, it'll be a little slower. Yes, it'll be capped as we've seen previously with the 217 contract that they had that, kind of messed us up when it came to the price of the ETF. But if they continue to raise the actual price of the contracts, we will continue to go up with Tesla. And what we're seeing from analysts such as Ron Barron, who has a good amount of his investments into Tesla, we can see that they are bullish. Everybody's bullish. And why are they bullish? Well, the same reason I've been saying in my other videos. Tesla is not just a car company. It is not. It is a tech company with a lot of advancements, a lot of investments made into other sectors than just cars. And even if we do just look at the car aspect of it, they are beating every single EV car manufacturer there is. Toyota is out of the race. They've stopped making EVs. They said they're no longer going to challenge Tesla. They're going to focus on hybrids. Ford is slowing down. Mercedes is slowing down. BMW is slowing down because they cannot afford to put such investments into electric vehicles. It's just too expensive, especially in the interest rates that we have right now, which are, in no time soon slowing down or getting lower, right? The next time they're going to start getting lower is estimated to be in the next year of June. So it's still a long time going. There's still 2 quarters ahead of us to where EVs won't be receiving, interest rates will still be high as they are right now. So Tesla doesn't have competitors. Tesla really does not have competitors in the vehicle sense because they've put so much time, so much investments into it, and they've really refined the EV aspect of it. They are not just placing a car frame on a battery they just slapped into a vehicle they already have, as the manufacturers as Mercedes, BMW, and all these companies are doing, right? So we have a person like Ron Barron saying this, and we have the CEO, Cathie Wood from ARK, which is, the underlying stock of ARK, another ETF of YieldMax, who's also saying the same thing. So let's go ahead and listen on her.
here's where we've learned how important Tesla's proprietary data is. It's 5 million robots around the world. Cruise didn't have anything like that. It had hundreds. 5 million robots around the world collect data every day and send it back to Tesla. Tesla has more corner cases, which means disengagements, accidents, information like that, than all the other companies in the world combined. And I have to tell you, watching the breakthroughs in AI that we are seeing, they are astounding, the speed at which this is moving. So it is interesting. I think it's a data issue. Autonomous taxi platforms are the biggest AI project in the world, and therefore we think Tesla is the...
But you've sold Tesla.
Okay, so as we can see, Cathie Wood, the CEO of ARK is the underlying stock of ARK, the fund. She even sees the future of Tesla, and she is bullish on it, the underlying stock of TSLY. Why? Because it is not just a car company. It is a tech company. Like NVIDIA exploded and you receive those huge dividends from the NVIDIA YieldMax ETF. You will be receiving the same thing from TSLY because it will also have a boom, as it always does, because Tesla is volatile and Tesla is a good stock to receive premium on and have it as an underlying. That is why I am bullish on Tesla. I am bullish on TSLY, and why seeing all these videos about how TSLY is going to go down, TSLY is dead, TSLY this, TSLY that. I'm so tired of it, because you're looking at all these analysts, all these big investors saying that Tesla is the future, which it really is. Tesla is the future, and that's the underlying stock for TSLY. So how are you going to tell me that TSLY is dead while the underlying stock is just getting started? It is just getting started. It exploded from a low of 197 in the past month up to back to 233. It's back up to 233 in a matter of a week or two. And you're telling me Tesla is dead and TSLY is dead. Come on, man. Come on. That is why I'm going to continue investing in TSLY, and I am continuing investing in TSLY. That is why I will continue to be making my dividends. And that is why, before you make any decisions, before you read that tweet, before you go on Reddit, before you watch a video on YouTube and make a decision saying, oh, yep, TSLY is dead, let me put all my money into QQY or QYLD or JEPI. Think about it. Watch videos, research it, because it is just getting started, baby. The party is just getting started. And if YieldMax ETF funders and the people who control the fund make some good decisions and put those contract prices up high and go a little less on the dividend side, we could experience that growth. We could experience the growth while receiving crazy dividends, because if Tesla starts going up, to the 300 levels, which it got close to in July, if it gets to those 300 levels, you already know that volatility is going to go high. And if that volatility goes up to that 96% that you see right there on the 52-week high, if it gets even close to like 70%, you already know this number is going to be 70%. It's going to be 80%. You already know that. And that 58-cent dividend we received, it's not going to be 58. It's going to be 60s, 70s, baby. It's going to be 60s and 70s. So that's why I needed to make this video. I have found all these videos that I've been watching, and I had to give it to you guys. I had to show it to you guys. And that is why I still believe in TSLY. It is not dead. TSLY is not dead. It is just getting started, baby. The fund, the party is just getting started. We're only a year in. Happy birthday, TSLY, YieldMax ETF, and ARK as well. Who cares about that? But still, happy birthday. It's been 1 year, and I'm ready for this shit to boom, baby. This shit's gonna go into the moon. Let's do this, baby. See you guys in the next video. I'm excited, baby. I'm excited.